If you guys didn't already know, I've recently become a massive fan of companies like Nubank, Mercado Libre, and StoneCo. What do all those companies have in common? Well, they're all based in Latin America. I want to go over a report from Atlantico talking about the digital transformation that is happening in Latin America. Now, this video is sponsored by public.com, but your time is precious to you, so let's just jump right into the video. So this is the report that I'm talking about. Atlantico's Latin America Digital Transformation Report for 2023, dated August 30th. Now, going through some of these different slides, the ones that I've actually picked out to be most important for the companies that I want to cover, like Nubank, Mercado Libre, and StoneCo, which are mainly focused in fintech and e-commerce. The part that's insanely important to me whenever looking at Latin America is the fact that their total addressable market is absolutely huge, with over 660 million people, a $6 trillion GDP, which would make it the third largest economy if it was one country. The exciting part about Latin America as well is that because all the countries are so close and a lot of the families and people that are actually tied there are also very close as well, that a lot of the companies like Mercado Libre or Nubank actually want to be developing products for all of these regions. Just in these top 5, Brazil, Mexico, Argentina, Colombia, and Chile, actually makes up for more than 80% of the total GDP for Latin America, for which companies like Nubank are in Brazil, Mexico, and Colombia right now. Adding companies like Argentina and Chile will still be a massive bump to the overall business model, just developing into more global areas. Now, another part that's exciting is Latin America's population is younger than most of the developed peers and will reach a peak growth by 2050. See, whenever you actually compare this to the likes of the US, where the median age is 38, Latin America's median age is 31. The digital transformation is so much easier because the population is so much younger. Now, one step even further than this is actually India. They even go above and beyond this at 28. And actually, the population growth should be peaking in India even later, which is quite exciting. A lot more growth there. But for now, for at least the next 5, maybe even 10 years, I'm going to be focused on Latin America. Then I might even start seeing great fintech and e-commerce companies, or maybe even a different sector actually pop up in India later on. But you're not quite seeing those large names yet. Anyway, onto this slide. Internet access in Latin America grew steeply over the last decade and is in line with access in high-income countries. Look at this. Just in the last little bit from 2012 to 2022, the amount of people that were actually in Latin America being able to use the internet now went from 43% to 78%. And in countries like Brazil, that's as high as 84%. See, what's amazing is countries like Chile is as high as 90 or Argentina 87%, but yet Nubank isn't even quite there yet. So I do actually think the adoption will be quite high because they have the ability to do so. And even countries like Mexico, 77%, where we're not actually seeing a lot of digital transformation, does still have the absolute capability to do so once, their peers see that there's a real effort to get people there. What is also exciting about Latin America and definitely stands out amongst the crowd is things like the heavy usage on the internet. Look at this daily average time spent on the internet from users from 16 to 64. In Brazil, as high as 9.3 hours per day, mainly on mobile, versus the US is only 7 hours and only 50%. That does actually lead a lot of these new features whenever you are publishing them out to Latin America, things like Nubank, for example, to have that so much higher adoption because people do trust and do use a lot of mobile services. You can even see that across Instagram, Facebook, TikTok, YouTube, and Netflix, where you're also seeing pretty high numbers comparatively to the rest of the regions of the world. And this all happened while still even the likes of high-speed internet and smartphones were still at, more infancy levels versus places like the United States. So there's still a ton of growth there to happen, and maybe the adoption and usage rates on things like mobile apps and, mobile banking will continuously see higher and higher use rates as they become more efficient. Markets have been getting crushed lately. And partially the reason is that investors don't want to risk their money in stock markets whenever they can get a risk-free rate of return of like 5.5% on government-backed treasury bills. That's higher than your typical high-yield savings account, plus it's also a fixed rate. which means if they say you're going to get 5.5% for a full term period, that means you're going to get 5.5%. Even if interest rates start to go down, your rate will still be locked there. The problem is the complication of investing in treasury accounts. You have to go on a government-backed website that looks like it was designed before I was born. This is where public.com comes in. Public.com just launched treasury accounts, which means you get to invest in treasury accounts at that similar 5.5%, get guaranteed, backed by the US government, and get all those fintech style products that we like and know today, like great app designs, no minimum hold periods, and no settlement delays. And public.com will already set you up to reinvest your money if you forget to take it out at that time. So then you get all the new interest that you would have if you forget your money was there. If you ever want it, you can always come back and pull it out anytime with no extra fees accrued on your account. You can do all of this, managing all your treasuries while still investing in stocks, crypto, fine art, collectibles, ETFs, and everything in between, all on public.com. Go to public.com/future investing to get that exact 5.5% on your cash backed by the US government. That's public.com/future investing. Now look at this slide because this might be one of the most important. Brazil is closing the gap in penetration of e-commerce versus the US, fueled by a large share of mobile commerce. Look, back in 2018, there was a 57% discrepancy, now only a 32% discrepancy, even though things, like I said, high-speed internet, smartphone usage is still very, very slow. Now, comparingly, mobile commerce versus desktop or tablet, once again, it's very much in favor of Latin America and still has a lot more to grow whenever you start getting into countries like UK and even China. That is, a large bulk. It's very much, the same reason why I'm very excited about places like Shopify, for example, because I do think that most countries will get up to the levels that China is seeing, if not even more going forward. But there's still so much growth for all of these different places like US, UK, India, and all of the LatAm. Now, if you are looking for e-commerce players in Latin America, there's really only one name that you can choose from. That's Mercado Libre, if you're really going to want a large share of the total amount of visits in e-commerce retailers, okay? That being said, it's still even growing, like even going from Q1 to Q2. You're going to see that all the way through till 2023 as well. It's still growing. Americanas actually saw a steep decline as well, which is leading to more and more shopping elsewhere, which, some of these Asian platforms are growing in LatAm just due to absolute cheap manufacturing. But if you actually want to talk about cheap manufacturing, you'll even see it more in Mexico than you will China these days. But still, I think we talk about that later on, but let's continue on. Access to banking. This is more the side of Nubank. What we can see is that there's still a ton of growth here. Just going all the way from 2017 to 2021, the amount of bank account penetration in LatAm has absolutely skyrocketed, and that's only looking like it's going to continue growing. And hopefully we'll get to the numbers like what US is seeing in the high 90 percentiles. What's really exciting is this part of the slide right here, bank account penetration across top 5 LatAm economies, okay? Brazil does show that there is an opportunity for massive expansion across the largest populated country in LatAm, okay, 84%. But the second most populated country in LatAm is Mexico, and yet Nubank just entered there back in May, okay? So hopefully the idea being that once they actually do get to a product and opportunities in Mexico that has not been seen in that country ever since Nubank actually just got that license, hopefully this 49% can grow into the 80 plus percentiles, and that will lead to a ton of new clients for that company, which I'm believing will still be one of the fastest growers in my portfolio right now. But let's move on. Okay, lower income clients drove new banking access, but those who remain unbanked perceive bank accounts as expensive, okay, which is absolutely crazy. 67% in Brazil is the percentage of people without a bank account who perceive the cost as the main barrier to opening an account. This is where companies like Mercado Pago or Nubank is the biggest differentiator, as obviously there is no cost. They're trying to bring in that new fintech style payments where obviously they're going to make their money elsewhere, like through interchange fees or something where more of the merchant side of the equation actually pays the bill and not you as the overall consumer. Unlike the traditional legacy banks in LatAm that still have all those classic Huge fees, low APYs for the consumers, and it's just a clunkier product whenever you're using their mobile apps. Now, this slide is quite interesting because this could look bad, and really, I think it's an amazing slide. Okay. Global venture funding fell 49% in Q2 2023 versus a year prior in LatAm, showing the highest regional variance. Okay. What's really, really exciting about this is that the players that did get massive amounts of funding during these times, like Nubank, for example, actually are losing competition going forward, furthering their moat because the new players that could come out are not quite getting the funding nearly as high as the levels in which Nubank saw back in 2021. So it's actually becoming a more dominant space because now they don't need the capital because they are one of the top 20 fintechs in the entire world that are actually gap profitable. Optimism reboots. Founders and tech employees report feeling optimistic 5 times more than they did last year. So if you're comparing 2022 to 2023, now is the time for absolute optimism just growing like crazy. Cautiousness is slowly coming down. If I were to be a betting man in investing, looking at the founders, the CEOs, the trends that they're seeing, the front line of people that get to see all the data, they are very, very excited comparatively to last year. And I'm sure 2024 is going to continue that trend. And Nubank, Mercado Libre, and StoneCo are my big names for that choice. Now this slide, the optimism is warranted. The prize is massive with trillions of dollars in potential value creation as region catches up to peers. Now, all this is showing is the tech company market caps as a percentage of the GDP. Obviously, US is much, much bigger than Brazil, so we're not comparing apples to apples, but we have to actually compare it versus the actual size, right? So versus the GDP, which still is a percentage basis, still only makes up a difference between 3% just in Brazil, all the way up to 64% in US. Obviously, there's many more founders in the US creating amazing products, but companies like Mercado Libre, Nubank, these sorts of ones that I want to pick still have a ton of multiple expansion that they can have versing the likes of these fintech competitors that they have in the US that are getting much higher rewards for their growth. If Cash App or something like this was doing what Nubank is doing in LatAm, the price of that stock would be 4 times higher. Then you're even seeing things like labor productivity versus firm size still, although growing quite fast in Brazil, especially in Mexico, lag very strongly to the likes of UK and Germany, right? What's very, very exciting about this is that things like funding in Latin America is very, very slow, however, growing quite fast. Things like productivity versus a per employee basis with things like better technology and better AI is very, very much lacking in Latin America and has a ton of growth to still happen there. And hopefully there will be some more, digital maturity, as they say, for stages within their companies. And hopefully the companies that I'm choosing are the ones that are actually seeing this. And then we're also seeing things like strong adoption of Pix, which is their FedNow style product that the government of Brazil has actually come out with. And also, in what they're not talking about here, is also things like CBDCs are also coming quite quickly in Brazil, and the adoption rates are unbelievably high. Now, look at this. Share per channel for accessing financial services in Latin America, okay? Mobile phone. As a percentage in 2012, 0%. 2017, 14%. 2022, nearly 80%. Okay. The growth rates right here is unbelievable. Like, I cannot get over Latin America right now. It is by far the strongest. Greater competition led to a boom in adoption of financial services and a battle for principality between players. Principality perception across banks in 2023, incumbents saw 34% of incumbents' user base saw them as the number one bank, their primary bank, and 58% as either first or second. Digital banks only 17%, but Nubank was by far a standout at 42% of clients chose it as a first bank, and first and second at 71%. Not even close to their competitors at 17 to 35. Just unbelievable. Nubank is a special beast. It's one of my favorite companies right now. The growth is just nuts. There's a bunch to be read on this whole page. You can pause the video, read all that. It's all great information. This entire presentation was packed full of amazing, amazing information on LatAm and how every aspect of this country is growing. Cash is king. Efforts to digitalize money in Mexico have yet to take off, keeping the country heavily reliant on cash. The amount that people use cash daily or weekly makes up roughly 22 to 24%. Okay, so totaling about 46%. On the opposite, Mexico, daily and weekly, 58 and 21%, totaling about 79% overall of cash reliance on Mexico. Okay, that even furthers as we get into monthly as well. But it's just absolutely crazy how cash reliant Mexico is. Where if we're actually talking about what I think New will do to the country, because obviously New has a financial relationship with 49% of Brazil's population. So if you think a small, individual fintech can't absolutely change the numbers for an entire country, I believe you would be wrong. Okay. I think that these numbers will drastically change for Mexico as Nubank comes in there and steals a large double-digit percentage of the overall population as the years go on. And then I just wanted to show this as well as sort of the total addressable market. LatAm in general shows high levels of dissatisfaction with their ability to access a credit. Now, that's really aside from Mexico, as they seem very satisfied with their access to credit, or at least much better than Colombia, Argentina, Brazil, and Chile. Chile being absolutely very unsatisfied. You know what? That could lead to a massive place for Nubank to get in there, offer things like credit cards and these sorts of things where people could get better access. As well as places like Argentina and Brazil led in consumer adoption of fintech services, followed closely by Colombia. Okay. Mexico and Chile also very, very low in these two matters. Once again, hopefully, Nubank changes their mind on that and could lead to a lot of growth. But also Argentina could be a great place for Nubank to come in as well, as obviously they have already seen a large adoption rate. And I do believe that Nubank has the best product in the entire region. Now, this slide is more of a reason for why I invest purely in technology companies and not just LatAm. Is the historical cost of compute memory and storage has just been decreasing over and over, okay? It's only getting cheaper. The digitalization is getting easier and easier, cheaper and more efficient. Furthermore, with the adoption of AI, we're seeing areas like customer service, logistics and supply, sales and marketing, even things like legal compliance and human resources, all seeing massive benefits with AI adoption going even just from 2019 to 2022. As we get into years even further than this, that I think is only going to ramp up faster and faster. They use case examples like for Nubank here. In June in 2023, Nubank launched Precog, a real-time event AI that has improved Nubank's ability to predict customer intent in customer service interactions by 50%. Okay? I want to get this across whenever people hear numbers like this, like double-digit percent improvements just from the use of AI from a single new tool, okay? This will be integrated through every single piece of their business, okay? And if we continue to bring on these double-digit growth, like percent growths in more efficiency, like companies in general, in the overall stock market, are all going to get more efficient, leading to what I believe is the next big bull run. Overall, these were the slides that were most important from the Atlantico Digital Transformation Report. Now, there were some other things talking about how LatAm has the best precious metals and these sorts of things, and the cost of actual, labor is much lower than places like China. These could also all be other massive ways that new money gets flown into Latin America, and the lower to middle class individuals actually start getting bumped up into more affluent areas of, the overall economy. If that happens, more money gets flowed through fintechs, the spending continues, and that all just leads to better stock prices for the companies that I'm investing in, like Nubank, Mercado Libre, and StoneCo. I hope you all enjoyed the video. If you did, make sure you guys hit the like button, maybe subscribe down below. Who knows? But aside from that, I'll see you guys next time. Bye for now.